Hello to the Hero community and hello to all the OKCoiners streaming this. Thank you for your patience. I know we had to reschedule this, but I think the timing worked out because today's a special day. We started to distribute the STX airdrops to the folks who joined the communities and started participating with and trading on OKCoin. So it's a great day to be doing this and reflecting back on the last 4 weeks. So with me, myself, a quick intro. My name is Haider. I am the Chief Marketing Officer at OKCoin. And with me, I have 4 other guests. I'm going to let them quickly introduce themselves.
Hi, this is Elaine with OKCoin. I am part of our crypto partnerships team.
Right, thank you, Elaine. And Brittany?
I'm Brittany Laughlin. I run the STX Foundation, which is supporting the STX ecosystem.
And of course, Muneeb.
Hey everyone, Muneeb here, co-founder of STX, and I now run Hero, a company focused on developer tools within the STX ecosystem.
Thank you, Muneeb. I think it's safe to say that we're all very thankful for your early participation and engagement. I think all your interest has really made our partnerships a huge success, and we're excited to continue this and bring more delight to you guys with new features and airdrops. Reflecting back on the last 4 weeks, there's been a lot going on. Of course, there's been a lot of challenges, and we'll talk a little bit about those challenges. But what I think we're all collectively really proud of are number one, your support, and 2, our ability to fix these issues really quickly and address them on the fly. So I want to ask Muneeb to help us think through the last 4 weeks. Share with us, Muneeb, some of the big challenges you guys have had to address and what the community should think about in terms of the next 4 weeks.
Yeah, absolutely. So let me give a little bit of a context first. So I think there were, in my mind, 2 kind of like really interesting, really unique things happening here with the launch of STX 2.0. One thing was that, so STX is kind of like our master design. You know, the project has been around for a while, but we were really heads down on the R&D mode of producing like this version of the blockchain. Like this is effectively the master design. And it's years of work, like 3+ years of work went into this. And one interesting thing was that it's the first blockchain that has consensus between 2 blockchains. Like usually you have consensus within a blockchain, right? And that's hard enough, right? Like if you're I think counterintuitive thing over here is building a separate blockchain is actually easier. Connecting to Bitcoin and having consensus between STX and Bitcoin actually adds complexity to the design. And we were well aware of that. That's the thing that we've been working on with our testnet and all of these things. But there's a second layer of complexity. And the second layer of complexity is that given the compliance and legal framework that we followed with the first ever SEC qualified offering, and because we wanted to open everything up to the general public, including the US, and we believe in the transparency that comes with being more compliant and paying attention there, a quality which actually attracted us to OKCoin as well and working more closely with all of you. That also meant that the network is either classified as a security and it's more under control of a single company, or it's not. Like there's no kind of middle ground here, right? So the STX 2.0 network was almost designed in a way that our company, we did the R&D and we built the public infrastructure, but we had no control over even how to launch it, right? It was a fully open, fully decentralized network, a certain threshold of miner reaches, and they're independent miners. Like my company, Hero, doesn't even run a miner. We're pretty much like a passive, almost like a entity that built the infrastructure and now is building developer tools here. So there was no permissioned network, which is usually what happens with blockchain launches, right? Like you have a permission set of nodes and you slowly open up the number of nodes, but we couldn't do that. We couldn't decide that, these 4 parties can be miners and nobody else could be a miner, right? So it went actual live, rubber meets the road on the Bitcoin mainnet with the consensus between the 2 chains on day 1. So I think, let me highlight some of the things that I felt went well, some of the things that were more challenging. So the things that went well were, by far, if you would ask me that what would keep me up at night, it's the idea that, is the consensus going to work, right? More importantly, is the game theory going to work? Are miners going to come in and would it find it profitable to actually participate in mining, or could it enter some sort of a negative spiral and there's not enough interest, or something else happens there. And so by far, I think those core things are a big check mark. Like the consensus is working, mining was like 300%, 200% profitable, and if anything, miners are becoming more stable. The launch of the rewards, where people are getting rewards, like that was like, it's happening for the first time. Like money is appearing in people's wallets, and miners are kind of like sending out those transactions, and just seeing that work out from a game theory perspective was amazing. And I truly appreciate all the hard work that went into this from the Hero team, the STX Foundation, the other entities here. And the stuff that was more challenging was, I feel like there is the core of the network, and then there are how people interact with it. So wallets or exchanges, or how the experience that somebody's having. Like, for example, let's say that there is a nonce issue with their transaction. The network is fine, but the user who's trying to use it is basically going like, hey, my transaction is stuck for like 7 hours, like what's going on, right? Until there is a fix and that happens. But the experience that person would have is like, I don't know, something's going on with this blockchain, like my transaction is stuck for like 7 hours, right? So I think there were those rough edges that obviously the team had to jump on, and shout out to the OKCoin team and engineers. I think you guys have been super responsive, highly professional to work with, and I'll get into some of those details later on. But I think in general, that's what we felt. Like the polishing around certain things, had to release a bunch of different versions of the wallet software quickly, had to release a bunch of node versions very quickly, kind of like fixing the API layer or the interface layer multiple times. And I think those are the pain points that people felt, and there's learning as well, right? Like how do we kind of like get better at not just the core design of the network, but also the interfaces and how people experience it.
Thank you, Muneeb. I think this is one thing that the community oftentimes doesn't get to see, is how much hard work is happening in the background to actually make these a possibility ultimately. And what we're seeing on our side within our community is the ultimate delight people are having, where they're earning these rewards in BTC. And then of course the market is really favorable, so the BTC price is going up, and they're looking at the reward price, and the price, the value is going up. So I think it's just such a great win for the early participants who participated in the first cycle, and I think we're seeing double the demand on the second cycle. Not to engineers on both sides, I think there's a lot of hard work and sleepless nights, and they continue to be the case. And thanks to the community for their patience and working through those with us. I'm going to quickly ask Brittany the question. Brittany, how is the stuff going from a foundation standpoint? What's your point of view? Is it what you expected? Are you seeing certain things that are just net new that are delighting you? Would just love to hear your view from a foundation standpoint.
Sure. So, STAX is an open source project. So our role at the foundation is to help facilitate ecosystem growth. Some of the things that Muneeb touched on, that Hero has been able to deliver some of the technology, but there's actually a ton of independent players who are playing a really large role in the STAX ecosystem. And that does include miners. So we actually have miners who are using that Bitcoin to secure the network. We've had over 50 miners participate in the network so far. And that's where the BTC rewards are coming from, as part of that consensus model. We've even seen some community members who were participating in stacking and really excited about the rewards decide that they want to get into mining as well, because it doesn't require special hardware. So they're taking some of their BTC rewards, they're feeding them into mining, they're earning stacks in return, and then they can turn around and stack those stacks as well. So I think that kind of pattern of people getting more involved in the network is something really exciting, and it provides new ways to kind of support this chain. Another thing that we've seen is just a lot of collaboration around updates. So the STX Foundation is helping facilitate the STX improvement proposals. So these are proposals from the community on how the network can work better. So one of the SIP's ideas is the cycle. So many people know that the reward cycle, if you want to compete, if you want to participate back to back, you either have to lock up early or miss the cycle. So there are some proposals about how to potentially change this in the network going forward. So I think that there's a lot of interest in just continuing to improve. And at the foundation, we're happy to just help make sure that all of these hundreds of independent developers and STX holders find a way that they can kind of contribute to the ecosystem. And then sort of the third thing is just around STX grants. So that's a big thing the foundation does, is being able to provide small amounts of money to people who want to build special things in the network, whether that's applications, tools, or otherwise, to make the network even better. So that's a big program that we have at grants, stx.org/grants, if you want to check that out too.
Thank you, Brittany. And I think your last point is especially interesting to myself. I think a lot of people are focused on the value that STX is providing in terms of earning and what have you. There's a bigger world out there that you guys have successfully created and are on a journey to create, which is these decentralized apps. And we've been encouraging our customers to not just trade and invest in STX and stack it, but also go and explore these apps, because this is about true digital ownership on the internet. And I think there are experiences that your developer ecosystem are building that are truly delightful. And I think in context of all the privacy discussions we're seeing out there these days, I think these apps are very relevant. So I encourage everyone here tuned in, please do explore these apps. I think you'll be pleasantly surprised that the ecosystem is further, quite further along than you'd expect. Switching gears to Elaine. Elaine, you've been on the ops side and the listing side. Tell us a little bit about what you've experienced the last 4 weeks, and what are you really excited about as we start to button things up going into some of the next few cycles?
Yeah, absolutely. So I think from my perspective, where we lead most of the listings and providing fiat on-ramps to new and exciting assets, I think the past 4 weeks are basically what we live for, right? It's identifying these really cool protocols and ecosystems that are really pushing the bounds of crypto and what it means. And Muneeb, to your point earlier, I think that was what was so exciting to us about STX originally, which is kind of like the game theory and the consensus model behind it, right? The fact that you're anchoring to a separate chain isn't something we've seen before. And so in many ways, like the past 4 weeks, I think has been a great validation to your guys' thesis and your overall work as a team and an ecosystem. And then from our perspective, it's just been really exciting to be able to facilitate this gateway into like a new version of crypto, right? Kind of this new era of like what it looks like to have a strong protocol that kind of builds on top of existing ones. So that's been really exciting to see in the last 4 weeks. Another thing has been just the overall, I guess, excitement and interest in the STX ecosystem. So we've published a few metrics on our overall earn product, but I think the biggest thing that really stood out to me was the vast majority of users who are stacking have chosen to continue stacking. I think I want to say it's probably over like 90% or something like that, just like a huge number. And I think that stat alone is like huge validation for kind of proof of transfer and like what you guys are aiming to achieve. So that's been really exciting. And I think looking forward, we're just looking to see a little bit of the same thing, right? Continued access into the STX ecosystem that we can provide to US users and to users around the world. I'm sure we'll talk about it a little bit later, but we did open STX access to residents of the EU and UK, which was really exciting for us. So, we're really happy to provide that. And then continuing to see users stack and be a part of kind of that connection between the Bitcoin base layer and the STX chain.
Awesome. I wanna give a little bit of a shout out here to the ops and listing team. So I think the backstory here is that we're obviously, given our SEC qualified offering, our company was operating almost like a public company because we do filings with the SEC and we do reporting, annual reporting and so on. We disclose our financials, and we've been getting this question like for the longest time ever from the community, that when and how would U.S. exchanges open for trading? And frankly, I could never comment on it. I could never answer. I couldn't even tell them that there is a legal framework that we are working on that we might release, right? So it's basically just like silence because of regulations and how careful we are. And when we released that news, I do think like, it feels like a long time ago, but it was actually like 2 months ago or something, literally, when it was like end of November, when we released the legal memo for the transition to a non-security status, which like, it's almost like, we are computer scientists at heart, but a lot of our time actually goes into those compliance and legal issues because no one has done this before. Like, there is no framework available for someone to start off as be careful and treating everything as a security and complying, and then over time having a path to decentralization and a framework for how you can actually achieve a clear non-security status. And a big shout out to the OKCoin team, who have very sophisticated kind of like legal experts and compliance folks who were able to understand the complexity and also be the first movers here, right? Like they, normally when people would see like listings, it's a little bit like there's some backroom deal happening with projects and exchanges. But in this case, like there's actually like no agreement between OKCoin or any other entity. It's not that, my company or STX Foundation or somebody else has made a huge payment to OKCoin to do this. It's like an independent organization that has very high standards for compliance and regulation, looked at a framework and made sense to them, and they saw a business opportunity to independently go ahead and actually open this up for the US markets, which is amazing for our ecosystem, because I think true independence and also like mutual respect for, just like we respect the OKCoin team and their diligence. Like I obviously, we would have a chat to kind of like share information about if you have questions about certain things. We were happy to kind of like do that. But that process was really amazing. Like you could actually, it wasn't like you're bumping your head against a wall, right? Like that the other party can't fully understand like why we have done what we have done and why it's actually a much superior approach in our view to some of the things that we actually see in crypto, where people stay in the gray area and kind of like hope that, okay, it's a gray area and hopefully nobody would kind of like look close enough there.
Muneeb, thank you for that color. I think that's really helpful for the community to understand the background. Thank you for the shout out to our compliance team. So you're absolutely right. I think we have some of the best lawyers and compliance folks and risk folks at OKCoin, and they've done an incredible job, not just with STX, but even some of the other listings we've done recently. I think to add to your point, and to be very candid with the community, we have to think really hard about the ultimate value that we're bringing to the industry. Now, there are a bunch of exchanges out there. So we had to take a really hard look at how can we create sort of a distinctive value proposition for customers. So one is we want to make sure that it's really easy for people to fund their account. And we realize we're not perfect at this. We're getting better. Our stack is getting better. But that's a really important focus for us, because we know that it's really important for onboarding new generations of crypto users that there's a really easy connection to their banking systems. That's number one. Number two is, how do we think about listings? If we're a product, we're an exchange, ultimately it's about the assets we're able to offer. So great, we can offer all the other assets that other exchanges have. But I think there's a key opportunity in the market that we found, especially in the US, which is there are these great projects and protocols and tokens being built. And oftentimes it's taking a long time for them to become available for US investors and traders. And with our fiat gateways and on-ramps, we felt we can go and own that space. So it's, I think, part of that motivation that brings this to life. But to close the loop here, you've noticed our high conviction towards Bitcoin and decentralized ecosystems. This is us doing our part in creating that future. So I think those are the two things that really excite us about partnering with you guys. And we're excited that US customers are actually using this stuff for stacking, for trading, and hopefully they will start to explore more apps in your developer ecosystem. Cool. So I have a couple of questions here from the community. Are we ready to take some questions, or is there stuff that you guys want to share, reflecting back on the last 4 weeks, or anything that's ahead of us?
I'm happy to take questions.
Let's dive
in.
Let's dive in. So I have a question here about specifically regarding the launch. So from our perspective, what was the most surprising thing that happened to us during the launch and the first round of Bitcoin rewards? Who wants to take that? Muneeb, do you want to start first?
Sure. I think the most surprising thing for launch would probably be, I think when someone sent me one of the miners, it's a hedge fund actually, which is interesting in itself, that miners don't have to be kind of like, when you think of mining, you think of like large data center, someone is operating, like tons of hardware and things like that on stacks because it's powered by Bitcoin. You could have a hedge fund and just like, one or two people who are optimizing just code and your mining strategies, they could be miners, right? So this hedge fund, they basically sent me a screenshot of the activity that was on the network, right? So we actually had a threshold in our code base that if there are 20 independent miners, they can actually trigger a launch. And then in terms of independent nodes, we were actually thinking that we'll get like, I don't know, 24 nodes or something like that. And the stats were that there were 1,200 nodes, like full nodes on the network, and there were 80 plus miners trying to mine, right? And it was just like mind blowing. And then seeing like the Coinbase rewards go out and people had written custom software. So imagine that the new blockchain is launching and some of these folks have already built custom optimized mining software with their own strategies to how to optimize kind of like getting the Bitcoin in and earn the stacks. And I think that to me was it was a very good surprise, right? And now I'll tell you a bad surprise. A bad surprise was when so the first cycle is roughly 2,000 blocks to 2 weeks roughly. So the first cycle, there was no rewards going to people. Money was actually just getting burned at that time, right? And it's a lot of capital. Like on average, we've seen close to $1.2 million worth of Bitcoin flow. So the first cycle, $1.2 million of Bitcoin just vanished from the planet, right? And it feels like a waste. Like I don't want that Bitcoin to be destroyed. So in the second cycle, Bitcoin would actually start distributing to the users. And I think what happened was that there were protocol details of the exact way that would happen, that even some of the team members were actually truly realizing, and they were sinking in, right? Like it's stuff like, if you lock for a cycle, you cannot lock back until a cycle passes, right? So it might sound like a small detail when you're programming it or when you're designing it on pen and paper, but when there's real money involved and someone is trying to make a decision that, hey, I'm going to miss a cycle in which I'll actually lose like thousands of dollars, like that was like a discovery. Or the minimum amount, I think another thing that happened was, the bad surprise was Bitcoin blocks just started moving faster. That's the last thing you need, right? Like something is about to launch and it's actually not dependent on human time, it's dependent on the blocks. And Bitcoin, for some reason, decides that the network is moving faster. So the time is like cutting down and we are trying to be on top of this. And here is a kind of like the second shout out to your team. Like, I feel like like in terms of communication, like it's like, imagine a highly stressful situation in which engineers are talking to each other, but there's like mutual respect and it's like you're having fun. Like, yes, it's stressful, but people are like, morale is high and everyone's kind of like excited. And even if it's like 2 at night, I felt like just working with you guys was like actually really, really fun. Like, obviously there's like very high bar for professionalism, which in crypto, like sometimes you don't get, but it was the fact of like feeling like, hey, we're all on the same team. We are all trying to do the best for the STX ecosystem. And yes, these things are going to happen and we'll react to it, but we'll do it in a way that, it's not like I'm stressed and I'm going to make you stress as well. Like, we are in this together. We might as well like have fun and just focus on the work that needs to be done. So I think the surprise around how quickly the cycles came and some of the details that came out was definitely a challenge.
Thank you. I think I can't stress this enough. People in the community, in our Telegram community or Twitter or what have you, probably get a sense of how complex this stuff is. How complex it is to just build it. 2, when you start shipping it and when you have everything planned to the T, even then, there are just so many edge cases and nuances that pop up. And I think it was just good chemistry between the 2 teams and a mutual respect that Muneeb, you mentioned, that made the work easy. But for anyone listening, it's pretty clear, if you don't have a passion for decentralized systems or crypto or building this sort of future that we all envision, it's going to be really hard for you to work in crypto because it is 24/7. These markets don't shut down. So it's, I think everyone here has been working really hard, and I think our community has been really been forgiving and giving us the room to fix these things and address them. So I think it's all been great. I think the people who enter these the reward cycles or start trading in a few months are going to be getting the right product that's been done through the hard work in this phase. Elaine, any learnings from your side that you want to share?
Yeah, so I have to say the STX listing was probably by far the most fun and exhilarating one. It wasn't the smoothest or the easiest, but I think that's kind of, I think we kind of knew it going into it because we were trying to list the asset as soon as STX 2 mainnet, right? And so, like you said, Muneeb, like the blocks I remember, I think I and your one of your developer advocates, we were just tracking the blocks for probably a couple of days, just try and time and see like how we can position this well and like make sure our community members know like when it's coming. And then it was averaging, I want to say like 11, 12 minutes for like days before the launch. And then all of a sudden we're looking at like 8-9 minute blocks. And I'm just like, oh my God. So yeah, to your point, I think learnings are lots of coffee and lots of caffeine and, just making sure that everyone is well rested before these launches from like the more human aspect. But I think the most fun part about it was just how decentralized and global it was. So I think we were probably people in like maybe 6 or 7 different time zones working to make sure that the listing was successful. And then I think one learning for us was definitely trying to be more, we always try and be super open and transparent with our community. But I think with this one, because we were so excited and looking forward to listing a super well packaged and complete one, we didn't want to let people know that we were still, it was very much like a mainnet launch, right? And so I think for us, the learning is definitely to be like, hey guys, like we want to bring this to you as soon as we can, but just give us a little bit of room to make sure it's safe and secure. And I think just being open about that is something that we'll be doing moving forward. That being said, Haider, like you said, we're so appreciative of our community giving us that room to make a few mistakes and then wait for us as we try our best to fix them quickly.
I agree. I think launching, the big learning is like launching a new asset at the time of mainnet is really complex. It's really fun. It's really exciting. It's really exciting for traders and investors because you're giving them access right away. But there's, I think we should set the expectation that when you're this early on a new listing, there's high reward, of course, because you're an early participant, but you gotta consider some room for these nuances, even with a really well pre-planned launch. Brittany, from your side of the house, when you were seeing all this chaos, what was your view?
Yeah, well, very similar. We got a lot of questions inbound right before launch, like what time exactly does it launch? What time exactly does it trade? And when you're operating with independent miners and blocks on Bitcoin, there's not an exact time. Even when we got to the block height that we needed to launch, it wasn't actually until that block completed that the launch happened. So people are like, it happened, and they're looking for it, and it's not on there. So I think it's very different than a centralized product where you literally push a button, everything works. This is, hundreds of people coordinating for that. I think the other thing just in the past few weeks is around the stacking rewards. I think people had a lot of questions. They were trying to figure out, do I stack for 1 cycle? Do I stack for 6? What's the calculator? Is it exact? And I think a lot of that is brand new, and it fluctuates a lot very quickly because you are earning in a different asset in BTC. If you're calculating your rewards on a US dollar basis versus a BTC basis versus a stacks basis, you're kind of going to get different numbers just based on the market price. So we've been trying to help educate people on what it looks like, and being very upfront and transparent that like a percentage APY really depends on which asset basis you're in. So we've actually seen, especially through OKCoin, the rewards are actually better than what they say sometimes because of these appreciating assets sort of happening in the market. So we've tried to be very transparent and exact, but it's not an exact number for that reason. So we've gotten a lot of excitement, I think, because of that. But it's also been just a challenge for us. How do we, make that as easy for people to understand as possible and not feel like this is some, this idea isn't fully baked. It's like, yes, it's in there, but there's a lot of moving pieces that contribute to the value of stacking. So we're happy to work with OKCoin on making that super easy for people to be involved, even if the rewards might be like a little bit of a surprise once you get them, but hopefully a good surprise.
I think so. I think the rewards has been a really, there was scrutiny around it. DeFi is so popular, especially coming into this year. But the performance of STX has just been surprising our customers. We have so many inquiries where people try and ask, how should they consider allocation between stacking, within DeFi or STX. So it's, they're clearly seeing the simplicity of earning rewards in BTC and not having to deal with all that complexity of going in and out of different assets and dealing with different fees and what have you. Even though, we remove some of the gas fees on our earn product, it's still not that easy to go in and out of these things. So I think you guys make it really simple. There's a question here around average API since we're on that topic. So right now, I think if you look at the last reward cycle, is it safe to say we should consider the last reward cycle to indicate about 15% APY? I'd love to hear from Muneeb and Brittany how you guys think about that number. Of course, there's going to be fluctuation. What do you see the next 4 weeks doing? How much is it dependent on Bitcoin's price volatility? Tell us a little more about that.
Yeah, I'm happy to take that, right? So in general, like, especially my company, we're not in the business of like offering any financial products or anything like that. We build the tools and now people are using the network. So my lawyers basically say, you can look at the real data and just present the data, right? So that's all I'm going to do. I think the data is something like there were 23.6 Bitcoin up to a certain block level. Like when we collected the data, the full cycle was not done. That was actually that was flowing in the ecosystem, right? So that's roughly like 1.2 million USD, depending on how you cost average the Bitcoin price itself, right? And what that turns into is actually, I think 15% is a low estimate because what is also happening is mining is going through a bonus period roughly until end of March. So basically what's happening is that the rewards that people are getting are effectively the bids in Bitcoin from the miners. Like, what value do the miners give to a block of stacks? And that depends on the Coinbase, which is the newly minted stacks tokens, and then the Clarity contract fees and the transaction fees. And right now, the Coinbase rewards are higher because of the initial kind of like bonus for the roughly the 2 months, right? And that's why I think instead of seeing the 15%, you're almost seeing close to double of that. Like, I think 27% is a good approximation, and which is obviously very, very high. And one of the reasons is also like the other knob is network participation. So right now, I think in the first cycle, 110 million stacks participated, which at the, if you take the price at that time was around $55 million, which is for a new product, like, you know, a new type of a contract in which money is being locked, like is huge. That number jumped up. So this morning was the deadline. Again, the deadline was based on blocks. Actually, someone, this is funny, like a developer made a when rewards tool. So all it does is like you go to the website and it tells you what block number the rewards are going to start and how much time. So it calculates time and human time based on like a low estimate. So that went live, and I think instead of 110 million stacks, now it jumped to north of 200 million. But the rate is still not going to change because we are still below this 25% threshold on the protocol side. Under 25%, this might feel like a waste, but the protocol actually behaves as if 25% of the network is participating. Any missing slots actually become burns. So in the first cycle, 110 million was going to users, which means like around 44% of the slots were going to users. That's why users might have actually noticed that they were getting rewards earlier, and later on nobody was getting rewards because Bitcoin was getting burned. 56% was actually getting burned. Again, pains me to see Bitcoin getting burned. So in this next cycle, we jump from 110 to 200 plus. That means less Bitcoin will be getting burned. And the reward rate is not going to change because the protocol was already behaving as if 25% of the liquid supply is participating. Once we cross that, then that's going to kick in. But then there are other factors like the stacks to Bitcoin price ratio is actually a factor. If stacks appreciates against Bitcoin, you're actually getting more Bitcoin as rewards. And then there are other things like in the long term, what's exciting is, and let me connect this back to the broader thesis of innovation around Bitcoin. Like stacks is really the thesis that smart contracts and apps can be built on Bitcoin in a way which is pretty much like in harmony with Bitcoin. You're not trying to compete with it. You're actually trying to grow with it. And you're trying to unlock Bitcoin's potential in DeFi by unlocking the passive capital and so on. So interestingly, like over here, the way to think about these rewards is that if smart contracts take off around Bitcoin, then in the future, the rewards would actually be based on the gas fees for the smart contracts, right? If a lot of smart contracts are being executed, that means the reward rate is actually higher.
Yeah, Muneeb, that's really interesting. And while you're talking about kind of your philosophy around how stacks and Bitcoin blockchains work together and grow together, to your point, we have a couple of really interesting questions from our community. One of our YouTube viewers, Brad, is asking, why do we have to stack every 2 weeks? And I imagine that this has a lot to do with how you guys have imagined both protocols kind of growing together.
Yes, so let me get in. There are technical reasons for that, right? So basically, the way we were thinking about this protocol was, and we have experience from Stacks 1.0, which was pretty much like Stacks 1.0 was putting a lot of load on Bitcoin because every Stacks transaction was a Bitcoin transaction, right? So if Bitcoin fees are now $40, like you have to pay $40 to register a username or a domain name on Stacks as well. So it's not scalable. Plus, because it's directly built on Bitcoin, you couldn't have full smart contracts. So that's why Stacks 2 is kind of like the master design. It has full smart contracts and it scales independently of Bitcoin. We can do thousands of transactions on Stacks and just settle on Bitcoin. But the dependence on Bitcoin is still that our miners operate on Bitcoin, right? So if we want to send true Bitcoin payments, this is not a wrapped asset or anything. Like when you're participating in consensus, you're actually getting payments on the Bitcoin chain. So that's a scalability bottleneck. Like we are not going to get, like, even if you look at the stacks holders, like I think there were something like 4,500 people who participated in our initial offerings, and then more than 300,000 people participated in an airdrop at blockchain.com, which, coming back full circle, Haider was actually at blockchain at that time and worked on that airdrop. So his association with our stacks community goes pretty deep. So all those 300,000 users, like if they want to participate in stacking, like Bitcoin can't send so many independent transactions to all these users. So we had to come up with some sort of a way to limit bandwidth on the Bitcoin side. And effectively, we came up with this mechanism where randomly 2 addresses get picked per block for the rewards. And we came up with this number of like 4,000, which fits in nicely as like a 2-week type of a window, which is more like a UX thing that, you know, people, like, it feels like, oh, I'm very frequently getting rewards, even though there's a random distribution, and it resets every 2 weeks. So there's 4,000 slots, and that's where the minimum threshold comes in. Because we have only 4,000 slots, depending on what percent of the liquor supply is participating, there's a minimum cutoff where someone can't get the slots. And it obviously, like, we believe in decentralization and open access, and it pains us that, you know, there are some people who just don't own enough stacks to participate directly. And I think that's where delegation or pooling services like you are running are highly valuable, because I know that it was a harder challenge to have you live on day 1 of the mainnet launch, but at the same time, I feel really good that people who were below the threshold actually had a realistic option on day 1, and they felt like they're equally part of the ecosystem. Like, imagine if they had no option, right? Like that would have been not a great outcome for our community, where it would be like, oh, only the people who are kind of like already own enough stacks can actually benefit from stacking. And you guys came in and you filled in that gap, and everyone can stack. It doesn't matter how many stacks you own.
Thank you, Muneeb. So switching gears and being conscious of time, I have one question from the community that feels like a good transition into the dApps on your ecosystem. So, you know, you guys have been giving grants for a while now. What are some of the top projects that you're most excited about that currently exist? And are there projects or apps that are being built that you can share with us that might not be on the ecosystem, but you're really looking forward, your collective team is really looking forward to it?
Yeah, sure. I'll quickly go over it. I'd love to hear from Brittany as well, since she's much closer to the grants. I'll just give a personal opinion on apps I'm excited about because I use them, or I'm just excited about them. One is Pravica. So people can go to app.co and they'll see a bunch of apps. I think Pravica might be in the top few listed there. So Pravica is actually a fully decentralized, almost like a Zoom chat plus text messaging. And I'm not going to get into what they're about to launch because I don't want to steal their thunder, but they're working on some really interesting next generation products for Stacks 2.0. They built what you see right now is what they built on Stacks 1.0, and they're doing some really cool things for Stacks 2.0 as well. But think of that as almost like a decentralized WhatsApp plus a decentralized Zoom, and it works today, right? Like it can scale, it works, and it's amazing. Another thing I'm pretty excited about is this app called Boom, which is a NFT platform built on Stacks 2.0, which is super amazing. Like, I feel like a lot of the crypto conversation is Bitcoin is hard money, Bitcoin is digital gold, or you go and it's like Ethereum has won the smart contracts thing. And I kind of like go like, people are just like missing the picture. Like there would be, you know, a bunch of other interesting smart contract platforms. Like I think you guys just listed Algorand today. We're very big fans of the project. We collaborated with them on our Clarity smart contract language. Algorand also has plans to kind of like integrate it. So I do think like the smart contract space is going to become very interesting, but Bitcoin is not going to just sit there, right? There will be smart contracts around Bitcoin, and you can't write off Bitcoin. And that's what Stacks does. And imagine, like, NFTs are all about durability or the value of the NFT. If you could issue an NFT on Bitcoin, like secured by Bitcoin, like why would you issue it anywhere else? Because I would feel like my NFT is actually worth more if it's issued on Bitcoin or secured by Bitcoin in a hash or so on. So those are two apps that I'm excited about. We'd love to hear from Brittany.
Yeah, well, to Muneeb's point, app.co, you can kind of see a number of the applications that already exist. Many of these are built on Stacks 1.0, so they don't have smart contracts built in, but they're everything from, a decentralized blogging platform where you own all of the data that you create. That's a great one called Seagull, to, a blockchain equivalent of a DocuSign. So you're kind of securing your signatures in a block, which is pretty interesting. But I think what we've seen on the grant side is that we actually have this category called a wish list grant. So these are ideas that have come from the community of things that people want to see built and want to help collaborate on brainstorming and contributing to these ideas, but maybe a team hasn't picked them up yet, or maybe a product is a work in progress. We've seen a lot of interest in these around some of the things Muneeb mentioned, like NFTs. I think it's really exciting when you can have smart contracts. Then you have marketplaces for NFTs. You have games that involve NFTs. So we've seen some approved grants and then also some wish list grants in those. Other things that we've seen excitement around are just more utility for the Stacks token. So now that this is live, people want easier ways to have mobile wallets, easier ways to trade between different assets, wrapped assets built on Stacks. So I think there's a lot of excitement around DeFi in general. And I think that we're seeing a lot of that come to Stacks as well. People want to build stuff. So we're looking forward to seeing some of those launch. We know that some things are in the works, but also for people who are working in the space or interested in the space can come and kind of build those. And we do have funding through the STX Foundation to help get those ideas off the ground. Like if you look in parallel at like Ethereum, something like Uniswap started out as a grant through their foundation to just help build more utility in. So I think it's pretty exciting to see what's going to be coming down for Stacks as well.
So app.co, I think everyone should really pay attention to this, because if you're in the business of trading and investing in Stacks and stacking Stacks, well, if these networks on these apps start to pick traction and become consumer applications, then arguably the value of these STX tokens or STX essentially is going to increase over time. So I think the bigger play is in the apps. I hope everyone in the community takes the time to go pick your favorite and start using it. And in fact, Muneeb, Brittany, we'll pledge that when you guys think that the Zoom-like app or the DocuSign-like app is ready, we as your partners will start using it with you guys. So you have our commitment there. Let's go at it.
That's amazing.
Yeah, fantastic. Yeah, and feel free to tweet us too, like, what you're seeing out there, what you'd love to see built, because I think there's a lot of green space on the Stacks network. And to Muneeb's point, it's built on Bitcoin, and we've seen that there's just so much utility that could be added to the Bitcoin network, and Stacks is really the way to do that. So we'd love to help make it easier.
Great. That sounds good. So I think we have one last question. I think we're running over, maybe coming at the end of the time. There is a question around airdrops, of course. What are the details of STX airdrops? Is it still ongoing? The first distribution of OKCoin STX airdrops went out today. Now it's not, everyone's going to get it at the same time. The distribution happens over a few days. We're not ending the airdrop. We're going to continue to the airdrop. The key motivation from OKCoin side is the following. We recognize people have a lot of noise to deal with. There's the Bitcoin price volatility. There's other listings that are going live. By providing an airdrop incentive, our hope ultimately is that you will trade this asset, you will invest in it, you'll stack it, you'll explore it, you'll learn about the technology, you'll attend sessions like this, you'll go explore the apps. And hopefully if all that works well and you continue to be delighted, then we're all being successful. So I think this is just an early incentive for community members who are taking the time, investing their mind space right now to learn about these things. There's no deadline on when we may finish this airdrop. I think we'll continue it as long as we're seeing good behaved customers utilizing these airdrops. So a couple of things around the airdrops. When you join OKCoin and you place your deposit, now it has to be a USD or a fiat deposit. What we do is we give you a $10 STX airdrop that you can do anything with. You can stack it and what have you. The only thing you are not able to do is that airdrop is frozen on your account for 90 days, all with the hope that that will force you into just learning more and participating more with us. Then if you start trading this asset, so say you traded 3 times or more, we will grant you another $15, so total $25 of an airdrop that you can earn through just depositing and trading this asset. And hopefully you will take that reward and stack it and do things with it, like use it in the apps. Then we have 3 other big prizes. I think in the next week or so, we will announce the winners. So there are 2 prizes worth of $2,500 STX. Then there's a big one, which is $10,000 worth of STX. So I think we're really excited. We are currently getting in touch with these customers. And we'll be announcing and celebrating them with you guys. And our hope is that if the activity is less fraudulent and there's actual real participants coming in for the right reasons, we'll continue to the airdrop for the foreseeable future. We don't really have a deadline in mind. So if you miss this round, don't worry. We're going to continue the next round and you can participate in the next round. So that's related to the airdrop. Elaine, do you want to add anything to the airdrop from your point of view?
No, I mean, I think it's a really good way to get into crypto if you haven't already. And it's, if you're already a lover of stacks, then it's even more reason to join. I did want to say, so our teammates are telling us that we have a lot of questions coming in through YouTube. And I'm actually wondering, Brittany Muneeb, if you can spare us a couple more minutes just so we can try and get a little bit more conversation, if that's okay with you guys, if you have time.
Happy to.
Awesome. So I think we've seen a number of really interesting questions, but a lot of them can be packaged under like this broader question of what you both talked about in terms of like DeFi on Bitcoin, right? And I think that's something that we haven't really seen anywhere. And hopefully this is just the beginning of it. If you guys could talk maybe about kind of, what that really looks like, right? Like what types of partnerships are you guys looking at? What's kind of, I don't know if there's going to be a STX 3 or something, but like what's next for you guys? Like what next is coming in terms of DeFi on Bitcoin?
Yep. So I think to understand that, we need to understand the Clarity programming language a little bit. So Clarity is our programming language that a ton of work really went into it. It is very different in the sense that it is not Turing complete, yet it is very generic, so people can program anything. It doesn't have a compiler. So if you look at it in our Explorer, for example, if you look at the POX contract where all the money is getting locked, you can actually read the code of that contract right there in the blockchains, right? So when people say code is law, but then compiled code gets published, and you don't even know what the law is. In our case, you actually can tell what the actual program is, what it's going to do, but it actually has mathematical proofs behind mathematical proofs of correctness, meaning that you can tell what this program is going to do even before executing it. And the unique property, so this is just the property of the language itself that we designed, Clarity, and Algorand is also collaborating on it. But when you run this language on stacks that has this consensus with Bitcoin, what happens is that these Clarity smart contracts, they now have visibility into Bitcoin. So if a Bitcoin transaction happens, they know about it, right? So developers can start writing code against it. That's why, based on, how much stacks are getting locked in a smart contract, Bitcoin transactions are going to the Bitcoin holders because that's the link, because Clarity actually knows about Bitcoin. So let's imagine that, we want to have a simple application. It's like, I'm entering a bet with Elaine for some reason, right? And the way the bet is going to work is we are both going to send Bitcoin to an address, right? The Clarity language, let's say, has a Oracle Chainlink for example, announced that they would be working on an Oracle service for Stacks, and the Clarity language knows how much we are betting, right? So there's a link to Bitcoin, and people's experience could be something like they're just sending Bitcoin transactions, and logic is triggering in the Clarity code. Now, in terms of like what we want to work on more is right now, Clarity has effectively read access to Bitcoin. We want to implement write access, right? And write access would mean something like, you locked up your Bitcoin on the Bitcoin chain, some Clarity logic executes, but then Clarity can actually dictate where that Bitcoin is going to go, right? Like based on, let's say it's some sort of a collateral, and Bitcoin collateral now needs to go to another party. Like that's a write command to the Bitcoin blockchain, which is theoretically possible. It's just not implemented yet. It requires a little bit more R&D. And I think that's going to be like, imagine Bitcoin has like $750 billion of capital. Even with these wrapped assets, you're talking about less than 1% of Bitcoin floating around in wrapped assets. If to truly use Bitcoin as collateral, to use Bitcoin in lending, to provide Bitcoin liquidity in smart contracts, like I think we are like 90% of the way, and we just need the last kind of like, so many things are already possible. Like for example, TokenSoft and Anchorage, they're issuing a custodial wrapped Bitcoin on Stacks, which has some nice properties. It's like a wrapped BTC that is secured by BTC itself. Right, but what would be really powerful is the kind of like fully decentralized. You lock Bitcoin on Bitcoin, and you use it on Stacks, and then you take it back to Bitcoin.
Yeah, one of the things on that that's sort of different even than some of those things that Muneeb mentioned is it's gotten a lot of interest in our community is around app chains, which is an idea that's kind of unique to Stacks, because we have proof of transfer, which is this tie of the Stacks chain to the Bitcoin chain through mining and rewards. But with app chains, you could actually build another application layer on top of Stacks using the same proof of transfer consensus. So that means that you would be burning Stacks tokens as a miner, and then being able to mint those new tokens. So you could imagine this like, if you have a specific application that you want to create new tokens for, you could use an app chain as a means to do that. So you're getting the scalability and the security of the Stacks chain, even the underlying Bitcoin chain, but you're able to launch new digital assets. And whether you want to have 1,000 of them or you want to have millions of them, you could do it using this sort of app chain framework. So this is being worked on right now by a few people of kind of documenting how exactly this would work and how it would look like. But I think it's really exciting to just open up a whole new category for entrepreneurs who want to build new assets or bring them to market in a new way. The proof of transfer on top of Stacks is actually something really exciting.
Yeah, absolutely. And just a couple other questions. I'm like, there's just so many good questions that we're seeing right now. So I think one thing that's been really important for crypto has been just like the ease of access, right? And obviously we have our own mobile app and we have our platform, but I'm seeing a number of questions here in terms of whether stacking will be eligible or will be available to use on like mobile apps or any other hardware wallets like Ledger. I'm wondering if you guys could give us some insight there.
Yeah, so there's actually an independent entity in our ecosystem called Secret Key Labs. They're based out of Hong Kong. They already have a mobile wallet. It's available also in Asian languages as well. So people should just go Google Secret Key Labs, download it. I think it's in a private release. You might have to first sign up, but people are getting it. So people are using it, and it has stacking functionality baked in. So I think that that should answer that. And then in terms of hardware support, like I think there is a Ledger Wallet app right now. It's in developer mode, but and that's for the Hero wallet, like the wallet that my company maintains, and that's in the process of actually getting approved for the main Ledger app.
Yeah, and there's a number of wallets being developed in the ecosystem. Muneeb had mentioned Boom Wallet. That's like a browser wallet. I think there's some other developments that we've heard about. I don't think they're quite launched yet that are similar to a browser wallet like a MetaMask, where you're very easily able to access your stacks that way. So I think we're seeing a ton of development around Stacks 2.0, and I think you'll hear a lot of launches in the next couple of months around ease of access. It's something at the foundation we're really looking to fund more teams, or at least support them in their launch, to make sure that you can, move your stacks anywhere you want very easily.
Yeah, what's amazing, what's amazing for me is sometimes I just like sit back and let the decentralized ecosystem, and I'm just like in awe of it, right? Like the Secret Key Labs wallet, there's an Android wallet, like there's someone working on the desktop Chrome thing. OKCoin, the airdrops you guys decided, like I had nothing to do with it, right? Like it's a airdrop, you guys designed it, you're running it, and I think like in some ways, like I feel it was a really good decision for Hero to narrow its scope and let the decentralized ecosystem evolve in a truly decentralized way, because that is good for the market. And I think like sometimes I hear about these updates and I'm just like sitting there in awe that this is just amazing.
Yeah. And last question from me from our community. And it's a good question. I actually haven't seen a question like this. This is from Robin Taylor from YouTube. As you know, free trade can only work in a state of peace. And so my question is simple. Will you support charitable or humanitarian projects? And Robin, if it's okay with you, I'll just expand the question a little bit more, which is, I think all of us are into crypto because we think it's a really positive social movement, right? We think it's going to change the world and we think it's revolutionary. How do you guys see stacks in like the broader intersectional aspect of crypto? And actually, Haider, I'd love to hear your points and thoughts on this as well.
Muneeb, I'll let you go first.
Right. I think I'd love to hear from Brittany as well because of the nonprofit foundation, of the focus of the foundation. But I think in general, the way we look at this is it actually goes all the way back to why Bitcoin. Like as I said at the beginning of this chat, that connecting to Bitcoin was actually the harder thing to do, right? But the reason to connect to Bitcoin, I'll share a very, very interesting feature of the Stacks blockchain. Stacks blockchain can actually use Bitcoin as a backup communication channel. You could do a transfer of the Stacks asset on the Bitcoin main chain. You can also do stacking on the Bitcoin main chain, right? So, and the reason, like, it might sound like, we're tinfoil hat, like crazy underground scientists who are like thinking about this world where something goes wrong and people are trying to censor things and so on. And we think that if there is a bad case scenario, like if crypto markets go down, if things are under attack, we actually think Bitcoin has the best chance of survival by far, right? So that's why we are plugged into Bitcoin. That's why we have this backup communication channel on Bitcoin, so that these applications built on Stacks, they actually benefit from the security of Bitcoin. You're literally, for someone to change the history of the Stacks chain, they also have to attack Bitcoin and change the history of Bitcoin. And I think that is the reason why we were building on Bitcoin, because we see Bitcoin as almost like Bitcoin is leading the torch of freedom and internet freedom, and we are kind of like getting behind it and building the missing features like smart contracts and other things around it. So I think that was the big thing. The second thing I would add is during the path to decentralization that we followed, we actually had a huge kind of like motivation for funding nonprofit work like the Stacks Foundation, or even, this is not widely announced yet, so I wouldn't go into details, but there are even like research universities that we have actually enabled cryptocurrency research there, and they're slowly kind of will make their own announcements and so on. But the framework for me was a lot of the early internet research was actually funded by DARPA. And it ended up being very decentralized, right? That DARPA gave grants to a bunch of universities, and then these open source tooling kind of emerged. And the way crypto is emerging is like someone has to build the protocol, and someone has to build the Genesis block. That ended up being my company. But we tried going as close to like a DARPA style model as possible by giving like significant amounts of capital. Like imagine the Stacks Foundation actually had 100 million stacks. At today's price, that's $60 million. I think the board of our company, like Albert or JP, who's a professor at Princeton, like they value decentralization, and we are structured as a public benefit corp. So it was very easy for us to make those decisions, to actually make those grants to the nonprofit foundations, to universities, and so on, and to leave room for these developers. And I'll stop there, and I'll love to hear from Brittany.
Yeah, to Muneeb's point. So we have 100 million stacks treasury that we're managing at the foundation. Our goal is really to enable this user-owned internet, which I think ranges from, you know, owning your own information, your own data, having alternatives that don't compromise on your privacy, and also the value that you're creating. And with that, I think that we've, we have a dedicated bucket just to research, but this is also policy research around how do we actually enable people to help do more work on giving back more privacy. How do we enable people to capture the value that they're creating online, no matter what jurisdiction that they live in? They won't be sort of restricted to the different types of payment networks that only exist in certain countries and not in others. So it's a huge initiative for us as part of the foundation and our mission to fund different pieces that kind of add into this user-owned internet. And we've seen a lot of interest in our governance group, especially around privacy, as a core thing that if we can deliver that on the internet, an alternative to some of the centralized players today, that's like a win in our book.
Yeah, I think you guys covered some really good points. I think ultimately what's really exciting about what you guys are doing is you're one of the few who are building on top of Bitcoin. And I think the values are clear. It's more secure, and how can we ultimately introduce more utility that goes beyond just the investment thesis? And I think this is the part that's going to continue to be really exciting for your ecosystem for the next 5-10 years. So I think when you look at OKCoin, while we don't say this in our messaging internally, we're a very Bitcoin first exchange. When we say that, it doesn't mean we don't value other tokens and networks. It's just that we have this belief that the crypto markets are ultimately powered by Bitcoin. Bitcoin is a foundational layer for all crypto markets. So when we decided to extend dev grants last year, we knew it was really important not just to help Bitcoin core developers get funding, but it was ultimately going to be great for the entire ecosystem, exchanges, wallets, other protocols, so on and so forth. So I think our conviction there is very clear. And personally, as a marketer, as somebody who cares about brand, I really value what Muneeb and team have been building, partly because they don't call themselves, Bitcoin STX. They have unique branding, unique naming. It doesn't confuse retail. They're very clear with their value proposition. They don't compete with Bitcoin or others. They're just ultimately trying to derive the best value out of the Bitcoin protocol. So I think that's the part I get personally really excited about, is ultimately look beyond STX and its price and what the developer ecosystem is going to bring to life. I think that's the really exciting part. It's almost like reflecting back on when Apple launched their first iOS SDK, whatever, in 2006, I think. One could never imagine the possibilities fast forward 15 years later. It took time for that developer ecosystem to build, even with the resources that Apple had at the time. So I think this is the part that's going to be really exciting. And you guys have heard me talk about this again, is like, don't just think about STX, think about app.co and the apps that are there, because if we build and facilitate those networks, that's where the magical world starts to appear. Cool. So I think we've gone over. Brittany and Muneeb and Elaine, you guys have been really generous with your time. I don't even want to look at our internal comms tools, because I'm sure we're all flooded with messages on where we are at this point. Thank you so much. I want to close with one thing. I think Muneeb, the team, we should all think about whether for every reward cycle, prior to it, we should do this session. Maybe that serves as an education for newcomers, and it just celebrates that moment going into the next reward cycle.
Yeah, really, no, this was fun. This actually just almost felt like a conversation that was super interesting. Even I know that there are people watching, but I would just have this conversation just with the four of you anyway.
Amazing.
Yeah,
Amazing.
yeah, and I'd love to be able to maybe feature some of our other builders in the network. So, Muneeb and I represent different companies in this ecosystem, but there's so many more people who are building really cool stuff. So I think there's no shortage of interesting new ideas coming out of Stacks.
We'd love to celebrate them. Let's do it. Well, thanks everyone. Thank you so much for